Welcome to your deep dive into today's market trends. We've got a stack of recent Yahoo Finance segments just for you, and some of the insights might surprise you.
Oh, yeah.
For example, we're seeing record highs in the market, but also record levels of investor bearishness.
Hmm.
Not to mention President Trump's new tariff plan.
Right.
It's a pretty fascinating mix.
Yeah, you're right. It seems calm on the surface, but there's a lot going on underneath.
Yeah.
Like a duck gliding across a pond, but paddling furiously to stay afloat.
Okay, so let's unpack this, starting with a quick snapshot of the major indices. The Dow, the S&P 500, and the Nasdaq, the S&P actually closed at a new all-time high, which seems to support that calm surface we were just talking about.
However, there's been a notable shift in market leadership.
Yeah.
We're seeing old school names like Oracle and IBM outperforming the so-called Magnificent Seven, Apple, Nvidia, Microsoft, and the rest of the big tech giants.
It's like a blast from the past, but does it make sense in today's market?
It does. Investors are seeking value and diversification. The Magnificent Seven trade is still considered the most crowded, but it's actually underperforming the broader market this year.
So maybe it's time to consider if your portfolio is overexposed to those big tech names and if branching out into other sectors might be a good move?
Yeah.
Now let's dive into those tariff threats. President Trump announced this reciprocal tariff plan, which sounds simple enough at first, matching tariffs imposed by other countries.
But the potential complications are significant. This could lead to higher costs for you as a consumer and a disproportionate impact on developing countries.
It's interesting that the markets haven't reacted too strongly to these tariff threats yet.
Well, it's possible that investors are hoping for a resolution or are unsure of the full impact. Remember, we've seen this before with some of Trump's previous tariff announcements, which were quickly reversed. One political science professor even mentioned how large tariffs against Canada and Mexico disappeared within 48 hours.
So maybe the markets are thinking, this too shall pass. But what if it doesn't?
That's the key question. If these tariffs do stick, they could fuel inflation, which might force the Fed to cut interest rates sooner than expected.
Okay, so let's shift gears and talk about the American consumer. The data here is a bit of a head-scratcher. On one hand, consumer spending saw its biggest drop in over a year in January, well ahead of expectations, and Morning Consult's price sensitivity index reached a new high, meaning consumers are very sensitive to price changes.
Right, but here's the paradox. Almost every consumer spending category is actually up this year compared to last year.
So how do we make sense of these seemingly contradictory signals?
It seems consumers are being more cautious overall, but are still spending. They're just being more selective. Certain categories like big box stores and general merchandise are showing weakness while others are doing well.
To help understand that price sensitivity index, a Morning Consult economist explained that it's based on the percentage of people who would walk away from a product if the price increased by, say, 5% or 10%. So it's a measure of how much price increases actually influence buying behavior. Now let's zoom in on some intriguing individual stock stories to illustrate the complexity of the market. First up, Intel. Their stock actually jumped on news of potential deals to split the company. Broadcom is reportedly interested in their chip design business, and Taiwan Semiconductor is looking at their factories.
It's a bold move, and the market often reacts positively to potential restructuring, especially if it unlocks value for shareholders.
Right.
But there are hurdles to overcome, namely regulatory challenges, especially with a foreign company potentially gaining control of a major U.S. chip maker.
Next, let's look at Meta. Their stock has been performing incredibly well despite negative press and regulatory scrutiny.
That raises a key question. What's driving this performance? Is it just momentum? Or are investors seeing something others aren't? Their massive user base creates what's called the flywheel effect, where more users attract more advertisers, which leads to more revenue, which then allows for improvements that attract even more users. It's a powerful cycle, and their AI investments could pay off big time down the road.
And then there's GameStop, the original meme stock, defying all expectations. Its price even rose on news of potential crypto investments.
This speaks to the power of retail investors and the effectiveness of coordinated buying. But the long-term viability of these meme stock strategies is still debatable.
It's like a digital age David and Goliath story playing out in the stock market. These individual stock stories highlight just how complex and unpredictable the market can be.
Indeed, these individual cases are like miniature versions of the larger market forces at play. They show us that investor sentiment can sometimes trump traditional financial analysis.
So what's your overall assessment of the market considering the potential risks and opportunities we've discussed so far?
The current market rally might be driven by a relatively small number of stocks. Broader participation is needed for it to be sustainable. And of course, government spending tax cuts and other policy changes could significantly impact things moving forward.
So it seems like we're in a bit of a wait-and-see mode. We've got this seemingly calm market surface, but a lot of potential for things to change quickly. And we haven't even touched on the potential monster under the bed.
Right.
We'll be back after a quick break to delve into some more of these fascinating market dynamics.
Sounds good. Speaking of potential monsters under the bed, remember that Bank of America fund manager survey we saw?
Oh yeah, the one where investor cash holdings are at like a 15-year low.
Exactly. It
Ugh.
suggests investors are going all in on stocks, yet Warren Buffett is sitting on a record cash pile of over $325 billion.
Huh. It's like he's seeing something everyone else is missing. Could this be a sign that the market is about to take a turn?
Not necessarily. Remember, Buffett is a long-term investor. He's known for his patience and strategic approach. He's likely waiting for the right opportunity to deploy that cash. He's been buying shares of Occidental Petroleum, which has valuable assets in the Permian Basin, and he's also increased his stake in Kroger, the grocery store chain.
So Buffett's betting on energy and consumer staples. Interesting. It seems he's not convinced that the tech-driven growth story will continue indefinitely.
It's a good reminder that there's always more to the market than meets the eye. While many investors are chasing the latest trends, Buffett sticks to his value investing principles, which have served him well over the years.
His approach definitely gives us something to think about. Now let's shift gears and talk about some individual stocks that caught my eye in those Yahoo Finance segments. There were a few stories that really stood out.
I'm all ears. Tell me more.
Well, one was about Nissan. Their board is putting pressure on the CEO, even though he wants to stay on until 2026. It seems they're not happy with the company's performance, especially with the electric vehicle transition underway.
It's a high-stakes game of corporate chess. The board is clearly looking for a change in leadership, but the CEO is fighting to stay in control. The outcome of this power struggle could have significant implications for Nissan's future as they navigate the competitive electric vehicle market.
It's a classic story of leadership and change in the face of disruption. And speaking of disruption, let's talk about XAI, Elon Musk's new AI startup. They just launched Grok, their answer to ChatGPT.
This is where things get interesting. Musk has been critical of OpenAI, even calling for a pause in AI development.
Yeah?
And now he's launching his own competitor.
It's like he's saying, if you can't beat him, join him and then try to beat him.
It's classic Elon Musk. He's not afraid to challenge the status quo and disrupt entire industries. The AI race is heating up, and it will be fascinating to see how it unfolds.
The stakes are incredibly high. The company that wins the AI race could potentially reshape the global economy and society.
It's a lot to take in. Maybe we should shift to something a little more grounded like tax season. After all, it's right around the corner.
Good idea. And speaking of taxes, I actually learned something new from those Yahoo Finance segments. Did you know there's a difference between tax deductions and tax credits?
Fill me in. I'm always up for a good tax tip.
Well, tax deductions reduce your taxable income, while tax credits directly reduce the amount of tax you owe. So tax credits are usually more valuable.
That's a helpful distinction. And while we're on the topic of saving money, I also came across a tip about setting up a separate savings account specifically for your tax refund.
That's a great idea. Out of sight, out of mind. And less temptation to spend it all at once.
Exactly. It's about building good financial habits one step at a time.
Now let's touch on a few other intriguing points from our Yahoo Finance stack. One story that caught my attention was about the rising popularity of private label brands at Walmart. It seems shoppers are increasingly choosing these store brands over big national names.
This highlights the importance of value in uncertain economic times. Consumers are more price-sensitive than ever, and private label brands offer a way to save money without sacrificing quality.
It's a smart strategy for consumers, especially with inflation still a concern, and it's putting pressure on those big national brands to stay competitive.
Absolutely. It's a classic example of market forces at work. Consumers are making their preferences known through their purchasing decisions.
Another story that stood out was about Airbnb. They're focusing on international expansion as growth in the U.S. slows down.
It's a strategic move. The international travel market is vast and growing rapidly. Airbnb is well-positioned to capitalize on that trend, especially as they expand their offerings and improve their platform.
It's like they're planting seeds all over the world, hoping to cultivate a global network of travelers and hosts.
And that network effect is incredibly powerful. The more people use Airbnb, the more valuable it becomes. It's a classic example of a successful platform business model.
Now let's bring it back home and talk about the state of the American consumer. There were some interesting data points in those Yahoo Finance segments that paint a mixed picture.
It's a topic that's always on everyone's mind, especially with all the talk about inflation and recession fears.
For example, U.S. credit card debt hit a record $1.2 trillion in the fourth quarter, and over 7% of those balances transitioned into delinquency.
That's a concerning trend. It suggests that some consumers were having trouble keeping up with their debt payments, which could indicate broader economic weakness.
And then there's the student loan debt crisis, which continues to weigh on the economy. Many young people are putting off major life decisions like buying a home or starting a family because of their student loan debt.
It's a significant issue that highlights the interconnectedness of the economy and individual lives. It's a reminder that economic indicators are not just abstract numbers. They represent the hopes and challenges of real people.
So we've covered a lot of ground here, from market trends and individual stock stories to tax tips and the state of the American consumer. It's a lot to digest.
But it's been a fascinating exploration. We've uncovered some intriguing insights, and hopefully you're feeling more informed and equipped to navigate the complexities of the financial world.
Absolutely. It's like we've taken a journey through the market landscape, discovering hidden gems and gaining a deeper understanding of the forces at play.
And remember, the journey is never truly over. The market is constantly evolving, and there's always more to learn and explore.
Speaking of exploring, remember that thought-provoking question we posed earlier? What if tariffs aren't the market's biggest monster under the bed? We'll be back after a quick break to uncover some other potential risks and opportunities. So we've talked about these big market trends and some potential monsters under the bed, but what about the average person just trying to make sense of it all and make informed financial decisions?
That's where financial literacy comes in.
Yeah.
And it was encouraging to see a couple of segments in our Yahoo Finance stack that address this very topic.
Yeah. It's something that's always top of mind for me, especially during tax season when I'm reminded of how much I still need to learn.
It's like a yearly wake-up call for many of us.
Yeah. So what were some of the key insights from those segments?
Well, one expert emphasized the importance of integrating financial literacy into school curriculums. They even called it a civil rights issue of this generation.
Wow, that's a powerful statement. I'd never thought of it in those terms before.
But it makes sense when you think about it. Financial literacy empowers people to take control of their financial well-being, which can have a ripple effect on so many other aspects of their lives.
Absolutely. It's about leveling the playing field and giving everyone the tools they need to succeed.
Right. Another expert highlighted the importance of understanding your own risk tolerance, especially when it comes to investing. It's not just about age, it's about your individual circumstances and comfort level with risk.
Yeah, that's a crucial point. There's no one-size-fits-all approach to investing. Everyone needs to find what works best for them.
Exactly. And it's a good reminder to regularly review your investment portfolio and make sure it still aligns with your goals and risk tolerance as your life changes.
Okay, now before we wrap up, I wanted to touch on a few other interesting tidbits from our Yahoo Finance deep dive. One story that caught my eye was about this new trend of workcations, basically people taking longer trips and working remotely from their vacation destinations.
Oh yeah, it's an interesting development. It speaks to the growing flexibility of remote work and the desire for a better work-life balance.
It seems like the lines between work and leisure are becoming increasingly blurred.
It's definitely a trend to watch. It could have significant implications for the travel industry and for how we think about work in general.
Another story that stood out was about the challenges facing the commercial real estate market. With so many companies embracing remote work, demand for office space has declined in many cities.
Yeah, this shift has created uncertainty for commercial real estate investors and developers. They're having to adapt to a new landscape where flexibility and amenities are more important than ever.
It seems like the pandemic has accelerated trends that were already underway, and we're still figuring out the long-term implications.
It's a period of transition and adaptation, and it will be fascinating to see how these trends play out in the coming years.
So if we were to distill the key takeaways from our deep dive today, what would they be?
I'd say stay informed, stay adaptable, and never stop learning. The market is constantly evolving, and so are the factors that influence it.
Well said. And remember that knowledge is power. The more we understand about the financial world, the better equipped we are to navigate it and achieve our financial goals.
Absolutely.
And with that, we've reached the end of our deep dive. We hope you found this exploration insightful and engaging. Remember that thought-provoking question we posed earlier about the potential monster under the bed? Keep exploring, keep questioning, and keep digging deeper. The financial world is full of surprises, and the more we learn, the better prepared we'll be to face them head-on. Thanks for joining us, and until next time, happy investing.